Hello traders and welcome to another video review. Today is Friday, December 27th, 2024. Let's find out what is going on Solana, because Solana is the altcoin of the week for zondacrypto for the week. That is apparently the last one, last full week in December 2024. So let's just dig in and see what is going on here. As you can see, I got a full screen chart of the Solana to Tether, and as we know, just recently we got a new local low made at the level of 176 Tethers, and since then the market has been trying to bounce higher. Now let's just take a look on how deep this market went before moving higher, because it looks like there is no let's say there is something special in this level here. Maybe there is something we don't see on this chart right now. Why the market stop at 176? So the first thing I would like to point out is the technical support. This technical support is located at 183, so not that far away from the from this movement bottom, and then there is a visible this high at 193. So let's just place this this level here, and you can see we got some sort of the demand zone quite wide, because it's like $10. Nevertheless, it's still very nice, solid, confirmed supply demand zone for the daily time frame chart of Solana. Now, what else can we apply to see what's going on this chart? I think the Fibonacci retracement would be a very nice tool. We take the extreme low, we then try to find out the extreme high. As you can see, what do we have here is the level of the 0.5, which is 50%, 186, and this level is just in the middle of these two technical resistance levels, horizontal ones. So this is very strong zone. This is very strong zone, supply demand zone, which is of course very strong because we got the horizontal technical support and the Fibonacci retracement level. So very simple tools gives us some sort of the clue, some sort of the indication when you ask exactly the question, how deep will we fall when we are coming off the swing high at 263, where the market can stop. So of course one level is not often enough. Now if we build this zone, we can see that this is pretty reasonable target for the bears. Let me just mark the low. So the low is blue, 176. Now what the market should do in order to move higher. So in order to move higher, let me just remove the Fibonacci retracement. Before we will do that, let me just switch the Fibonacci retracement. So before we will move higher, now we are going to measure, let's say, this swing. Yes, extreme low to extreme high. As you can see right now, we retrace like 23% of this movement to the downside. But if we want to move way higher, or if we want to continue the uptrend, then definitely 209 Tethers is the level to watch, because it's 38% Fibonacci retracement. 219 is the level to watch, because it's a 50%, and 229 level, which is a 61% Fibonacci retracement level, is definitely the one to watch. So if we want to continue the uptrend, we need to break above this three strong levels, 61, 50 and 38, especially 229 Tethers. If you don't know much about Fibonacci trading, Fibonacci retracement, let me just switch to our lesson 3.09, applying the Fibonacci sequence in technical analysis, which is available for free in Zondacrypto Academy at zondacrypto.com. So if you can find this lesson, there is plenty of the information, how to use Fibonacci retracement, how to use Fibonacci extensions, how to interpret the data, how to draw Fibonacci projections, retracement. So everything is here for your disposal. If you want to learn, if you want to make yourself better and more knowledgeable about the technical analysis, especially the Fibonacci, this is the perfect place to start. Let's go back to our chart to see what else can we say about this situation here. Of course, if we apply one more indicator, which is RSI indicator, this is our momentum indicator, we can clearly see that we almost hit the extremely oversold condition while we were moving lower. Right now the momentum is still low and it's still trying to bounce. As you can see, the momentum has been trying to bounce here and then move down, bounce here, move down, bounce here, move down, bounce here. And now if the situation repeats, then of course we will definitely hit the extremely oversold conditions, maybe even lower, and then the market will be ready to move higher again. So if we will not break above the technical level of let's just disregard the Fibonacci for a second. If we won't break above 204, the technical resistance level, then the market will likely repeat this sequence, and we will go below the level of 30 on the daily RSI. And of course, last thing we want to apply to our chart is the technical line, which is the trend line. As long as we trade below the trend line, below this area, the outlook remains bearish as well. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.